All right. Let's see if we can get a trade here up into buy side liquidity. We're coming up on 8:30, and we've got jobless claims coming out then. We're reaching up pretty quickly, so we'll see if we do get a little retracement into this BISI being created here. Otherwise, it may just run off to the buy side without us. Well, we will see. We're continuing to trade higher, working within a market maker buy model right here. After trading back down into a discount of the range, we dropped into a 5-minute BISI right here, and we're continuing to expand higher up toward the buy side. See if we can get a retracement in there to start buying. If it doesn't come back, that's all right. We are in that 750 to 810 macro right now, so we could see an expansive run. And this is ultimately where we're reaching for from the daily time frame. Buy side liquidity above. Up here. Oops. Just entering in the mitigation block here. And let's see if we can book our first entry. There we go. Stop will go under the bullish order block right here. And I'm just looking at this range and finding discount as well, and at the opening price of the order block, I'll pyramid 3 more into the position there. And then given another opportunity, I'll pyramid up to 10 contracts. And we will reach for the buy side liquidity up here. I'll just take a partial above these highs. So the initial entry here is in this BISI, buy side imbalance, sell side inefficiency. The buy side has been delivered, not yet the sell side. We're coming back down, trading back into it to redeliver the sell side within that area of inefficiency. That's where I'm taking my entry. And the price engine is already sending price higher to reach above this high where there's buy side liquidity resting in the form of buy stops. So anyone who's been short throughout the London session has to protect their position with a buy stop above the highs. So when price returns into a discount down here within this range, it offers a new opportunity to accumulate long positions and then offset them above the highs by selling to those buy stops. And we'll see if we can continue pricing up that way ahead of 8:30. There is a jobless claims announcement at 8:30. So I'd like to see that send it up there, if not prior. Okay, and we'll see if we can pyramid in 3 more contracts here at the little volume imbalance in there and in a discount. It's also right around the consequent encroachment or the midpoint of that BISI identified on the 4-minute chart. list here. Buy side liquidity. So the trade idea is already there. We already have the target that it's reaching for, being buy side liquidity up here, and the highs from the London session. We're just finding an opportunity to get involved with the order flow. And price is always just moving to one of two areas, wherever there's inefficiency or liquidity. And it moves between those two areas as well. So if we're going to price up to the buy side above this high, where the buy stops are resting, then think about it like a paint roller. If we're going to move from the bottom of the wall to the top of the wall, we're going to move higher. We're going to come back to those areas that got kind of missed or improperly painted over. You know, when the paint roller was kind of losing its paint a little bit, we're coming back to fill those areas back in, and then continue reaching up to the objective, the top of the wall. So we're rolling that paint roller from the bottom, up, down, up, down, up, down, up, down, up, down, up, until we meet the objective. And here's the execution. This is a live market. Market open. You can see the countdown right here. You can see how the minute marker 8:18 lines up with my computer time. 8:18. And we're coming up on that jobless claims 8:30 news announcement. So just looking for price to continue working up into the buy side. And I'll take 2 of the 5 contracts off at buy side liquidity up here to pay myself on the position and put myself in a spot where I can move the remainder of the trade to break even, just cover cost on the trade. And then I'll take some more off on the way up to buy side liquidity up here. So for that, I'll actually just quarter this. Take the highs right there. And 91 1/4. And it'll go like that. So I'll take another off right there. Another at the midway point, and then I'll hold 1 for buy side liquidity. And we didn't get our pyramid there, but that's all right. And at this point, I don't want to see any deep retracements back into this area of inefficiency. So we can go ahead and cover costs on the position and avoid any loss by moving above break even. There's now several PD arrays between the current price and the initial entry that should protect it. And if it is to come all the way back to break even, it's not a trade that I want to be in any longer. So you have your mitigation block right here. You have a BISI right here on the 1 minute, which we traded into right there. And we're continuing to price higher up toward the buy side liquidity. Just hitting that down close candle right there. Looking at that as the bullish order block. So we shouldn't need to reprice back any lower than that. So just expecting the mean threshold of that to hold at this point. So you can see the sensitivity right at the mean threshold there. So this is your bullish order block. We tap right into the midpoint, the mean threshold. And we're continuing to price higher off of it. Nicely respecting it. And we've got 5 minutes until the jobless claims announcement. I want to see this just continue to price up into the buy side above this high and then up toward this high up here, which is from the daily time frame right here. So no need to be nervous about retracements. You already understand where price is going to, where it's aiming for. Retracements are just the opportunity to return the sell side delivery on buy side imbalances here and here before continuing up into where the liquidity rests above this high. And you can see we're getting close to it now, so I want to see it kind of start to snap up there. No, not any very deep retracements at this point. It's okay if it still pulls back a tiny bit, back into these down close candles here. But I'd like to see it price quickly up into the buy side. So you can see the initial entry right there in the 4-minute busy. And then there we go, trading off the order block and up into buy side liquidity, booking the first partial right there. And now we're paid on the position. The stop is at break even, so no matter what, even if it returns back to break even at this point, it's still a winning trade opportunity by booking a partial right here. I'm not trying to hold the entire position to the terminus up here, though I'm giving myself an opportunity to take more on the position. That's why I have partials set out at that quarter point and the half point between this target and the projected target up here. And then an opportunity to exit a final position at the buy side liquidity up there. And we've got the jobless claims announcement here in 30 seconds. I think my camera had it covered before, but you can see how the timing, 8:29, is aligned with the time here. And 8 seconds, and then we'll have the news release. Here we go. So that books the second partial. So now we're paid pretty nicely on the position at this point. And we'll go ahead and trail this stop up to just below mean threshold of these down close candles here. And also below this up close here, which I'm viewing as a mitigation block. If we're going to continue pricing higher and not have a retracement back down onto sell stops, I'd like for new accumulation to just take place within the range of this up close candle here. So stop can go below that. So now even if the remainder of the position is stopped out, we're getting paid on it, and we've already been paid from the partials taken here and here. Okay, and there we go. That stops out the rest of the position. And there's the business on it. Here's those couple partials up in here. And you can see through just working with consistency, base hits over time, then you can start to grow an account. So I've been working on some pyramid entries. I didn't have an opportunity to pyramid here, but I've been working on this account since January. You can see is when I started it. Right here on January 5th, started the account with $100,000 in it. And then through the course of things, between then and now, which is March 21st, so it's been about 2 months and 15 or 16 days, the account's grown 130%. So pretty good returns just through working through base hits, identifying the draw, pyramiding in when it makes sense, and of course allowing for losses too, because losses are going to happen. We're not perfect, we're human. There's times where we see it wrong or we make a mistake in our execution, and generally speaking, you'll see that the losses are fairly small compared to the winning opportunities. There are a couple times where I've slipped up and had a little bit of a larger loss than intended, but for the most things, through proper risk management and being careful about how you're sizing into positions, you keep the losses small and you're able to have larger winning opportunities that can compound that account. All right, but that's it for today. Hope you enjoyed this little scalp opportunity here right up into the buy side. I do expect price to trade here as we get into the AM session, but now it's 8:30, so we can retrace on stops, have another opportunity to accumulate positions at a discount, and then take it up to the buy side here. That'll be it for me for today, and I'll talk to you soon.